Okay, again, anytime you see big spikes in volume, you should be saying alert. Okay, you should be ready for this particular pattern. So again, if the market is bearish, it's going to come in here, retest the support area. It's exactly what it does. Next thing we're going to expect it to do is start to push down. You've either got a short here or a short as the market comes up into the resistance area. Of course, coming into the resistance area, if you're shorting up here, that's a much more aggressive move. So let's go ahead and take a look. You can see the aggressiveness of this trend. Again, this is something that I cover in the quick start videos. When the market is getting into a strong trend, you will see the retracements are very shallow. And look at this. The market could close up here at the 38%. It did manage to push higher, but look at where it closed. Down. It just simply could not get going to the upside. So we had a good push up. The market's continuing to go down. Again, at this point, you've got to be thinking bearish. If you pardon the pun, bearish on Bear Stearns, you've got to be thinking this market is going to be moving down, and at the very least, it's going to be moving down into some of these old 2001 consolidation levels. At the very least, that would be the first stop. So the market, you can see here, boom, pushes down. The next month, pushes through the $100 level. And then that's all she wrote. The market went into a slide, opened up really today. Let's go down to a daily bar. Here's the daily bar. And you can see that over the last several weeks, this thing has just been on a slide to the downside. We'll go ahead and put our lines on here. Back to daily. There we go. So you can see, let's go ahead, let's zoom in here now on the daily. And you can see the volume. In fact, the volume has increased so much in the last couple of days that the February and beginning of March volume, you just can't even read it. So let's go over here. So look at this. The market has been trading. I'm trying to get a read on the average volume here. So on the average volume, looks like around 11 million or so. Anyway, so average volume is staying fairly constant. If you look at this, as we're coming now into the last few waning days of Bear Stearns, and listen, if I sound flip, I apologize. If you were in Bear Stearns, you have truly my deepest sympathies. But in the last few waning days of Bear Stearns, you can see as it breaks through the lows here on the daily bars, you can see the volume continuing to spike up. If we go back here, as the market breaks down into these lows, you can see the market has a huge volume spike. This again, when you see big volume like this, you've got to be thinking, remember, alert. Okay, huge volume comes in for several days. The market trades into this triangle pattern and manages to break out. The true test is going to be what happens when the market comes back down into here. You can see as the market starts to move up, volume declines as the market's moving up. As price starts going down, volume starts to increase back again, breaking through support, volume staying high, never a good sign. So volume just continues to increase as the days go by. We can see here, go ahead and just accelerate through March. You can see as the slide starts to come in, breaking through, these are multi-year supports here. As the market starts breaking through, volume just absolutely through the roof until finally today, yesterday the market had a huge down day, and then today gapping down to $4.81 as basically the firm has got to cease operations or get bought out. So I went through the sequence on a monthly basis. If we would step through this on a daily basis, I think it would just take far too much time. So let's check this out on a weekly basis. And we can see a very similar pattern. If you remember from the monthly, we had an area remember in early 2006, we had this expanding triangle pattern. Here's the breakout. We'll have to zoom in a little bit since volume increased so much on a daily basis. And if we look here on a daily basis, we've got, let's see, roughly speaking, 10 million shares is the average. Okay, so we go from an average of 10 million. Where in early 2007, once Bear Stearns started announcing his hedge funds were having problems, the hedge funds are melting down, look at this, double and triple the moving average in volume.